Good day, viewers. Welcome to another episode. We'll be looking at royalty account today. If you are new to this channel, please do well to subscribe. And if you are a returning subscriber, we say thank you. What is royalty? Royalty. A person may own a right and may allow another person to exercise or use that right for a consideration. The amount paid by the person is called royalty. So if you have a legal right and you gave permission or license to somebody else to enjoy that right for a consideration, that amount, the money the person pays to use that right is regarded as a royalty. Royalty can be in form of copyright, patent rights, mineral rights, as the case may be. So a musician may also own a music and may give permission to another artist to feature a portion of the song for a consideration. And any amount that is being paid is known as the royalty. So we have two parties to a royalty transactional agreement. We have the grantor and the grantee. The grantor is the person who allows another person to use his legal right for a consideration. So the grantor can also be called landlord or can also be called lessor. While the grantee is the person who enjoys the right of the owner. So we call the grantee tenant or lessee. Then it is important to understand what is actual royalty, minimum royalty. You should understand what is short workings. Then short workings recoverable or short workings recoup. Then we have short workings lapse. Actual royalty, this is the amount of royalty that is based on the actual level of activity or utilization. So it could be the total number or the total amount of royalty based on the number of books sold or number of units produced, as the case may be. So actual royalty depends on the level of activity. So if they produce more, if it is production or it is about selling of books, you are selling on behalf of an author. If you sell more, then the actual royalty will be more. Then if you sell less, you have a lesser royalty payable. The minimum royalty, this is the amount that the lessee will pay to the lessor, irrespective of the level of activity or utilization. So no matter what, in any given year, the lessee or the tenant cannot pay below the minimum royalty. Short workings occur where the actual royalty is less than the minimum royalty. In a given year, let's say actual royalty amounted to 10,000 naira and the minimum royalty is pegged at 12,000. Now, no matter what, in any given year, the minimum royalty should not be less than 12,000. And let's assume that the person or the tenant made 10,000. There is a short workings year of 2,000. So when actual royalty is less than minimum royalty, that difference is called the short workings. Then short workings recoup or short workings recoverable. You can also recover short workings if you have excess in any given year. So where there is excess, I mean where the actual royalty is now more than the minimum royalty, that excess can be used to recover the previous short workings based on the agreement entered by the landlord and the tenant. In some cases, short workings can be recovered with limitation of time and without limitation of time. So if it is with limitation of time, they may give an instruction or probably may be an agreement that short workings should be recovered after 2 years it occur. In such case, if the short workings cannot be recovered, let's say they have short workings in 2012, 2013, 2014. Let's say short workings in 2012 is 10,000. And the agreement stipulated that short workings can only be recovered 2 years after it occur. So if they cannot recover the short workings in 2013 and 2014, it is not deemed to be what? Lapse. Then if it is short workings without the limitation of time, meaning any time they have excess, they can recover that short workings. Now we'll look at the main account prepared in the book of the grantor and in the book of the grantee. In the book of the grantor, who is the landlord, you maintain, in the book of the grantor, you maintain royalty receivable account. Royalty receivable account. This is an income account and it always have a credit balance. Remember, income have credit balance. Then we have the tenant or the lessee's account. Lessee or grantee or the tenant account. We'll also show in the book of the grantor, lessor or landlord. So whichever name given in the question, that's what you use to work. So the landlord account, the lessee's account is an asset account, and all assets normally have debit balance. All assets have debit balance. Then the third account you prepare in the book of the landlord is a short workings allowable account. Short workings allowable account. This is a liability account, and all liability always have credit balance. Then in the book of the grantee or the lessee or the tenant, you also maintain 3 books. We have royalty payable, is an expenses account, and all expenses always have debit balance. Take note. Then we have the landlord account, landlord or the grantor or the lessor, whichever name. This is a liability account to the tenant. This will have a credit balance. Then lastly, short workings receivable account. This is an asset account and it have a debit balance. Now we'll consider a practical question. All right. Sand Limited acquire the right to extract sand from land owned by a freeholder under the following terms. Sand Limited. So Sand Limited is the tenant or the lessee. We're told that Sand Limited acquire the right. So is the one paying to exercise or use the rights of the owner of the land. So Sand Limited here is our grantee or the tenant. So we're using grantee for this calculation. Okay, so Sand Limited acquire the right to extract sand from land owned by a freeholder under the following terms. The payment of royalty is at the rate of 60 kobo per ton extracted. The rate is 60 kobo per ton extracted. A minimum payment of 1,200 naira per annum. A minimum payment of 1,200 naira per annum. A right to recoup short workings up to the end of year 2, after which the right was to be extinguished. So this question, if you listen very well, it does not talk about short workings to be recovered 2 years after it occurred. He said short workings should be recouped up to the end of year 2, meaning any amount after year 2. It means you cannot recover short workings after year 2. all short workings incurred in year 1 will have to be recovered in year 2, and if it cannot be recovered, it is deemed as a lapse. During the first 3 years of the contract, the following quantities were extracted. Following quantities were extracted. Year 1, 500 ton. Year 2, 2,400 ton. Year 3, 4,000 ton. The accounting year of both the company and the landowner are on 31st December. The landowner received payment on 1st February following the year end. You are required, the ledger account, to record this transaction in the book of the land owned. So we want to prepare this account in the book of the grantor, which is the landlord. So what you do first of all, you prepare a preliminary workings. A preliminary workings. So let's show that. A preliminary workings. All right. Now we have here the tons extracted, the actual royalty, the minimum royalty, the short workings, recoup or recoverable, short workings, lapse, and we have the amount received. All right. All right. So for year 1, so what's the first year? We were giving year 1, year 2, and year 3. Year 1, how many tons were extracted? 500. Year 2, 2,400. Year 3, 4,000. Now look at the question. We are told that the amount, the payment of royalty is at the rate of 60 kobo. 60 kobo. So to get the actual royalty, it will be 500 times 60 for year 1. They extracted 500 tons, and the amount they pay per ton is 60 kobo. So 500 times 60 kobo give us a 300. 24 times 60 kobo, 1,440. 4,000 times 60 kobo, 24. Then what is the minimum royalty in the question? A minimum payment of 1,200. A minimum payment of 1,200. So 1, 2. In every given year should not be less than 1, 2. So if you look at the first year, the actual royalty is 300, but the minimum is 1, 2. So there's a short workings here. Since the actual is less than the minimum, we have a short workings of how much? 900. So the amount to be received by the landlord, irrespective of the level of activity, will be the 1,200. In year 2, they now made excess of how much? Excess of 240. So we recovered only 240. So that excess will be used to recover the short workings in year 1 above. So the 240, if we recover 240 from 900, how much is still left? We have 660. So that 660 will be deemed to be lapsed, because we are told that the right to recoup will be extinguished at the end of year 2. It didn't say 2 years after the short workings occur. At the end of year. So long the short workings cannot be recovered in year 2, the difference is deemed to be short workings lapse. And the difference is how much? 660 short workings lapse. So the amount, regardless, the landlord will receive is how much? 1,200. Then for the 3rd year, we have actual royalty as 2,4, minimum royalty 1,2. So there is no short workings here. So the landlord is going to receive 2,400. All right. So the landlord can receive more than the minimum royalty, but cannot receive less. The landlord can receive more. So where there is no short workings to recover, the total money that was made will be paid to the landlord. Because that's the agreement, that is to pay per ton. It is only when there is short workings to recover that the money will be used to offset the short workings, and the landlord will be paid the minimum. But in this third year, because there's no short workings to recover and there is excess, it means the landlord will receive that actual royalty based on the level of activity. So now we'll prepare the account in the book of the landlord. In the book of the landlord. So when in the book of the landlord, please take note, those figures for actual royalty. Take note of them. Think we have how much here? 300, 1440, and 24. This actual royalty column, we are going to work with these figures, and also the short workings of 900 you have here, and the short workings recovered of 240. So take note of this column. We are working strictly with this column. So in the book of the grantor, who is the landlord, which is land owned, we have royalty receivable account. Like I said, this is an income account to the landlord. So it always have income, always have credit balance. So in year one, what is the amount, the actual royalty received from the grantee, which is a Sand Limited? You can either put grantee or put the name of the entity there. So how much is the actual royalty? Like I said, you are going to make use of your actual royalty paid by the grantee in year one. 300. Okay, so you balance the account year one to P&L, an income in P&L, 300. Year two, how much is the actual royalty? 1440, and that's all. P&L 1440. Year three, 2,400. Year three, 24, and that's all for the royalty receivable account. Then you prepare the tenant or the grantee's account. The grantee is Sand Limited. Who is the grantee? Grantee's account. In the grantee's account, we are told that grantee's account is an asset account to the landlord, because the grantee is the debtor to the, so and debtor is an asset. So it has a debit balance. Year one, start from the debit side. What is the amount of royalty due from the tenant? How much is the actual royalty in year one? 300. And there is a short workings of how much? Good. Remember that the minimum is to pay to the landlord is 1,2. So there's a short workings of 900. So the total here will give us 1,2. So you balance the account by bringing bank or cash. The amount is going to pay to the landlord is 1,200, regardless of the level of activity or utilization. Year two, how much is the royalty receivable? 1,440. Since there was no short workings, it was excess. You have to record the excess on the credit side. So you see, in that year two, there was no short workings. If it was short workings, it would have taken the same column, the same side of the grantee's account. But since it was excess, So you say short workings recoup. How much was recoup? 240. Good. So it means that the tenant is going to pay the difference to the landlord. What's the difference? 1, 2. Lastly, in year 3, how much is the royalty received by the landlord? 2,400. No short workings. So that's the amount is going to pay to the landlord, 2,400. All right. Then the last account you prepare is the short workings allowable account. Short workings allowable account. Short workings allowable account is a liability account to the landlord. So it has to be a credit balance account. Year 1, from the lessee's account or the grantee's account, Sand Limited, how much is the short workings here? 900. Balance the account. Year 1, balance carried down 900. Then year 2, your balance carried down here will be your balance brought down here. How much? 900. Now, assuming in year 2, they also made short workings, you would have added it to this side as well. But because they made excess, and since the excess have been credited here, 2,400, the corresponding entry will be to the debit of the short workings account. If you look at the short workings here, 900, debit in the landlord, in the grantee's account, the corresponding has been credited to this account. So it's still on the rule of the double entry principle. So long the short workings recovered is credited in the tenant or the grantee's account, it will be debited here. Since that, if it is short workings, you add it up, you continue, your balance carried down, then brought down. But since it was short workings recovered, still in that year 2, they recovered from the grantee's book. How much was recovered? 240. Then the remaining amount is regarded as what? Lapse. What's the remaining amount? 660. 660. So this is short workings lapse. So it will not be carried forward. So the short workings ends here. There was no short workings in year 2. So this is how to prepare the account in the book of the grantor. So if you are asked to prepare this same question to show the accounting posting in the book of the grantee, it is just the opposite transaction. In the book of the grantee, this will be royalty payable account. Everything here will be on this side with the particular as what? Grantor. Then this P&L will be on this other side. The same thing. Everything here to this side, everything here to this side, particular here will be the grantor. And same thing, the opposite side. So in the book of the tenant, it is still the same treatment. There's no new entry. It's just, since this is receivable in the tenant account, to be payable. So the opposite side, then particular will be grantor, and that's it. So this will be part 1 for this royalty account. In our next video, we examine sublease, how to treat sublease in royalty, where a tenant gave license to another person again. As a result of that, maybe with permission from the landlord. Let's say the landlord gave right to the tenant. The tenant gave right to somebody else again with the permission of the landlord. So how do you prepare this 3 account? So in our next video, in part 2 of this royalty account, we'll look at sublease. So for now, thanks for watching. Please subscribe to our channel, and we say God bless you.